Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, January the 18th, 2023. It was a great day. It was a great day for trading, and it was a great day that the market made clear several points, at least in my view, and I'm going to share that with you now. But we saw a lot of interesting moves in the various different sections of our markets, equities, treasuries, the dollar, etc. We saw a lot of different things kind of come, congeal, and move as I thought they should, but in many cases, particularly between treasuries and the dollar and treasuries and the equity markets, they would be going in opposite. And so we're delivering different messages, underlying messages, I should say. In any case, I want to begin here with the S&P, and I want to begin with the hourly chart. And what we did today, as a matter of fact, it does appear that we have now completed the C wave within the last ABC up. So here in the S&P, I'm counting it as a triple ABC. It was that final C wave that actually took us up to the resistance levels that would be associated with the move that it just completed. So it basically took quite some time to get us to that point, 2 weeks, and then it took an additional week and a half to get us up to that top. So it all fits very cleanly in terms of time. It fits very cleanly in terms of the count. It was not always an easy count, but nonetheless, it did fulfill the requirements within each of those particular waves. Now, to finish that off, I have a triple ABC here in the S&P, and within that final C wave up, I can count 1, 2, 3, 4, and it's the wave 5 that just kind of diagonal its own little way, but just did get itself up there. And so within that, the 5th wave also extended greater than the 3rd, but still extended very cleanly. And what we then have is 1, 2, 3, and then we're in the 4, and then the 5th wave again subdivides, and basically very tight diagonal, but ends up failing by a little bit with today's high being 40.3250, we'll call it. And no, that's not right. I'm going to take that back. Today's high, 40.3275 versus Tuesday's high or yesterday's high, which came in at 40.35. So off by a little bit, so I'm going to allow it. But in any case, I am putting the 5, the C, and the minor wave 2 as complete here. What does that suggest? As I stated in last night's update, while we allowed for that additional move, we allowed for a possible run up to 40.40 or 4,040 here in the S&P, and then 4,050, and then up top we had 4,063 to 65-ish in a very tight zone right there. And I had allowed for, as the reaction off of the PPI final, which came in exactly as they had expected, but it made me sit down and realize it's like, maybe inflation's also doing a wave 2 counter trend. And that inflation will continue now to reassert itself. And then we will see that inflation number to change yet again. Because as the Fed chair, and who, by the way, comes down with COVID today, but also the Fed governor is going out basically stating, do not get so excited about these changes in the inflation numbers via CPI and PPI. That moving forward, their full intent is to get inflation back down to their goal, which was 2%. That's the target. In any case, also stating that they're going to continue to raise the rates. So CPI and PPI in 1 month showing an improvement does not send out a message that, oh, we're all going to pivot, et cetera, et cetera. Now, I want to take 1 minute and discuss, and I will right when I'm done here, between the S&P and the NASDAQ. I want to go over and I want to discuss the 30-year bond and the activity that was taking place over there today. Now, again, it all fits in with particular Elliott counts that are happening in each one of these markets. I continue to look at this larger picture here in the S&P that we're finishing an additional wave 2 correction. So now what we have coming off within our C wave is 1, 2, 1, 2. So as expected, this intermediate third wave is subdividing and will form its own wave, 5 waves of minor degree. Within that, looks like we have finished minor 1 and today minor 2. As I spoke also in last night's update, I spoke about, should the market begin to sell off? Here's what we would be looking for to give confirmation that indeed X marks the spot for the completion point. And that would be that it forms 5 waves down on the hourly chart. Well, I decided to go down and go look at the 15-minute because I wanted to open this up and see exactly how it's kind of coming off. Again, crazy move here. But if I'm going to label at the top, then what I have is a 1 and then a 2. And then the 3 subdivides 3, 4, 5. And I actually don't think that 5 is done yet. So we may have continued a little bit lower again before we get again a wave 2 correction. And I chuckle because we keep getting hung up in these wave 2 corrections. And if we get another one that it took, what, 4 or 5 hours for us to drop to form this first wave down, and then it's going to take us 2 weeks to go through a wave 2, I don't believe so. I think once the tide turns and it's becoming more clear, and again, I think what also added to today's decline was Microsoft announcing and actually publishing the letter to everybody to say what and why Microsoft is doing what it's doing as it looks to move forward, and immediately announced that it's going to take an over, I think it's a 1.2 or 1.8 somewhere in there, $1 billion write-off or charge against earnings to dismiss 10,000 employees globally. I believe it is globally. So I think that kind of spooked the market a little bit, because we know we've already heard it. We've also heard from Apple. We've heard from a lot of the individual larger companies, Amazon, Google, all of the big boys, Meta. So the reality starts to creep back in. And the reality is, it's like, no, we're not going to be starting a big bull market rally right now. It just doesn't fit. Not only doesn't fit, it doesn't work in terms of what the reality is telling us with our economy, with our governance, with the global geopolitical situations. It's not, it just does, it was a false narrative. And to go on things such as, well, earnings, we're into earnings, and earnings are going to be really great. It's like, well, we need to take and look very closely at Goldman Sachs. Yes, JP Morgan reported a little bit bad, but they dropped it. But don't forget, by the end of the day, they run it back up. And they closed higher on the day after it reported. It dropped on the earnings. It dropped a little further on the opening the next morning, and then they closed it up on the day. And that, I guess, spelled a different type of a message for people. But if we really looked at it, who got hit hard today? JP Morgan. Imagine that. So when the reality sits in that was the quarter, that was the year end for them. Now we're moving forward. We've already heard from Jamie Dimon. We've already heard from the CEOs of the other banks talking about moving forward. The country's not going to have a smooth ride. It's going to be a bumpy ride for 2023 and probably 2024. We're going to go into a recession. We've heard it from several bank officials, right? High up in banks. We've heard it from, now the Fed hasn't actually mentioned that, but we've heard that narrative from a lot of different people. I think that's beginning to hit in. The fact that the United States is going to be hitting the debt limit tomorrow begins to hit. Now, whether or not that the big traders or whomever's were waiting for this PPI number because they thought, well, we'll get another chance to sell. I want you to think about that. If you're going to go out there and you're a trader and you need to dump a bunch of stock, and then you're looking at this stuff, and maybe you're an asset manager within an ETF and you need to dump a bunch of stock. You're going to try first to get it to a point where it's going to become more attractive and that your job is going to be easier and better. So PPI, we saw the reaction off the CPI. Oh God, let's just wait for the PPI. It'll run itself back up. Then we'll start. And you can see, folks, it pretty much did. The opening took it up to the high, and then they sold it, and then they sold it. So when you start to see what's been boiling all along be shoved to the front and then shoved into everybody's face, then reality comes back. Again, Elliott Wave has no knowledge about anything in the economy, has no knowledge about what's going to come out in the news, has no knowledge of earnings, nor actually does it care. So when we're forming our accounts, there's many other things that go into play, and it's the market itself. So the fact that the S&P and the NASDAQ, all the markets, did a lot of chop and did just all the way up. Fits and starts and fits and starts and fits and starts and fits and starts. So it all fit and never changed. That the market actually in the S&P needed to get above 4180 to prove that it is indeed in a larger rally phase. And that would have been, and on my count, a primary B wave rally. So the primary B wave that we're putting as complete, I believe, in October, would have been pushed over. Now, moving forward, I've added the Fibonacci extensions for the minor third wave. And I'm looking for this third wave to have been kicked in right now. Again, as I stated, when this market begins to sell off and it starts to break the moving averages, and in particular, I was working off of the hourly chart, and this is where we were coming in. And as I said last night, everything was still pointing for the market to go higher. Now, let's just take a review after we had a serious, strong, negative rejection of that high. And it just followed all the way through. And what it did, first it broke the 4 and the 8, which we totally would expect pretty much anything. So that was up at like 4,015, somewhere in there. Then it broke the 50, 4,009. That played around a little bit, but when it started to come in, and then you started to see this, and you started to see the 20, and then the 50 turned, it was getting serious, and so was the selling. Now, initially, I thought if it only broke and was kind of going to hold here, then these would go flat. Well, that turned, that adds to that there was a lot of sell pressure today. Then we had the 200. The 200 broke late in the session or towards the afternoon, but it went and then accelerated again. At first, held it, went back above it, actually put in a green bar, and then boom, just sold afterwards. Now, again, on the hourly chart, we're getting pretty good confirmation. Now, if I have to go inside this wave, I believe we're still, I can count 5 down to here. So the internals would be showing in here a 1, 2, and this is a 3, 4, and this would be the 5. I don't think the internals on the 5 show that it's totally complete. So maybe we get down to 39.40. Again, now I've put up the extensions for minor wave 3. This should just be a pause, just a little stop. And it might be that what we're finishing up is minute 1 of minor 3 of intermediate 3. So we're quickly going to get to that point where it'll be 3 of 3 of 3. So that should be fun. But what I think we're going to get for tomorrow, we have some numbers that'll be coming out. I don't know if they'll have a good, strong housing starts, jobless claims, and Philly Fed. Take it back. It's going to be jobless claims and Philly Fed. Now, those numbers might continue to show an improvement. I don't know about jobless claims, but Philly Fed might show an improvement in terms that would give a little bit more that manufacturing is doing well or getting better or whatever the situation may be. Jobless claims were, retail sales were very disappointing today, but it didn't really affect the market till much later. Then they used it as an excuse for why the market was declining. Jobless claims, I'm going to feel that it's going to continue to show less claims are being filed, more people are going to work. And that is inflationary. So we could get a stronger reaction off the jobless claims and the Philly Fed than housing starts. Unless housing starts is going to come out stellar and stunningly to say, yes, we got a bunch of new construction going up and a lot of new permits have been issued. And I don't really see that as we're in winter. So I'm looking for continued downside, but I think once we finish 5 down and you can count it cleanly on the hourly, look for 3 up. So again, if we're going to start to break and we're impulse wave, it should be very clear. And we'll get a lot of these and not a lot of these. It'll be more directional. Once the trend resumes and we get the 5 down, 3 up, I'm looking for another 5 down, and we know that'll be a third, should be bigger, should be longer. Now, what are my expectations here? Well, just to make my life easy, I'm going to go out to the 4-hour chart again. Now, we're trying to plot the path for minor wave 3. Well, if we look at the Fibonacci's, minor wave 3 should be number 1, break below 3502, or actually, what is that one? 3788. Should break below 3788 cleanly. Wave 3 should break the low of wave 1 as it continues lower, put in a new low. And on a Fibonacci basis, we'd be looking for at least 100%. That's 3641. My view here, that'll be, again, just a place to pause, because normally under Elliott, wave 3 is the longest and the strongest out of waves 1, 3, and 5. So we already know what 1 is. So for it to equal wave 1 could work, but I'm always going to be looking for more. That brings up 1.236, which is 3550, 1.382, which is 3500 down to 3490. But the magic and most common numbers down here, 1.618, that the third wave is normally 1.618 times the length of the first wave. That brings us down to 3400. So 3391 is the exact number, but 3400. And then we get a minor 4 and then a minor 5. And that, my friend, is the one that I suspect will take us down closer to 3,000 down to 2980, actually all the way down. And that then puts in the intermediate 3. We get an intermediate 4 and an intermediate 5, and that takes us likely down to here. And that'll complete cycle wave A. So again, we're back onto counting down to the wire to where all of this should put in its bottom and give us that cycle wave B, which should be, you want a rally? That'll be the time. I will be the biggest cheerleader of that rally. I'll be the biggest cheerleader. Like, yeah, just pick out some long positions and go for it. That's how obvious it will be. So when we're seeing this kind of chop, folks, and we're saying, well, is that the bottom? No, look at this. Does that tell you that's the bottom? It truly doesn't. That was because it finished 5 down. Now we got the 3 up, and we already know that corrective structures are very complex and they're not easy to count. But once you can figure it out, now we're ready for the next. We will recognize the next 5 waves down. As we did here, we will do here, except they should be bigger. So over to the NASDAQ. No, I take that back. Let me go to the long bond, the 30-year. The 30-year bond. This is a very interesting chart. I'm going to go very quickly. If we can, let me just go to that 3-week. Okay, so on the 3-week, here we have all-time high for the bond price. So, and as you can see, the all-time low for bond yield, pretty much in the same neighborhood. This one was in March of 2020. What a magic month. We're looking for our equity markets to go to those lows. And here, that's where this one started. So what we've gotten thus far is 5 waves down. So once it reached there and we started to rally, I thought, okay, we're in a little bit larger rally. I can count 5 down. I'm looking for an ABC up. Now, what this looks like here, 1, 2, 3, 4, 5, wave A of the ABC. I'm looking for a B wave now. And I thought, well, maybe that could have been all of it. If I start to bring this down and I look on a daily chart, could have been all of it, right? Here's the same thing. Is that an ABC? Oh, maybe. So I left it there. But again, it could have been wave A of B, wave B of B, and look at, you can't get flatter than this thing did, right? If we remember that in a corrective, counter trend rally or decline, there's 2 forms. Zigzag, which would be zig, and then a zag, or flat. So we're inside the B wave, which is going to be 3 waves in and of itself. So we can get, that looks pretty flat. This is 3 down, 3 up, and now we'll get 5 down. And possibly bring ourselves back to here. If I have to combine that, one of the big questions in my mind, and I've discussed with other people, is like, okay, I've got to get this dichotomy down, because if the bond market, if the bond prices, if the price of the bond is going to escalate, is going to go up, and is going to pick up steam, which we saw, well, in the long bond, it was up over 2. That's the rally today. Now the market sold off and the bonds continued to hold that level. Important. But if it turns from here and ends up flat and it goes back down to that 4% yield, or back down towards 124 to be totally flat, before we again bring in the next 5 waves up to complete this larger corrective rally. That then brings us back to where the bonds have a chance to get up to there, because that's would be expectations on a Fibonacci basis. Now, so with this being a flat with the potential that we can go down, that'll add fuel to the fire. That'll add fuel to the, rates are not going down. And it'll be shown by the bond, by the market, by the move in the bond. So we'll see. Over in the NASDAQ. In the NASDAQ, it's pretty much the same thing, but I want to open this up as I'm going to bring it back down. I'm going to go to that hourly chart because I want to show you. Remember, I had drawn these lines and they were really for the triangle, for the diagonal that was happening. Look how clean that was. We just take it to here, it traded within, shot up to a new high, as the NASDAQ did beautifully, went through 0.618, shot above, which the NASDAQ does very regularly, and then died. Now, this was classic. Finishing a diagonal, you go up, done, gone, and everybody's like, that was it, sell. And that's what it felt like somebody just opened the door and said, okay, we're all leaving now. And down it went. And broke the channel, broke below the 8, broke below the 4, the 8, the 20, the 50, and was heading, and I believe will finish this first 5 waves down in the area of that 200 period moving average, the hourly 200. And then we're going to get a wave 2. And we'll work out the fibs. We'll definitely work out the fibs. So this is what's left in terms of if this market pulls it together, if they want to call that pulling it together, but just go, no, we're not. And they just go and buy it and take it to new highs. That's next up. But I'm going to take that off. Now, if indeed, right, there's the minor 1. This is just a double ABC. We have the first ABC, we have the X, and we have an A, B, and that C wave, which again, like in the S&P, finally got to that level. Like this level right here was 0.382 retracement of wave 1. I'm like, well, if that's all we're going to get, boom, we're done. So if you remember, I had put this here, but then the market said no. And we pretty much came off just like it. And they went, no. And then they went, yes. So again, I'm being very careful on how I'm counting it. Well, yep, it's not over until it's over, so to speak, but I'm labeling it as complete, which means I'm looking for downside. And I'm getting stronger signals that it is complete from the S&P because of breaking the 200. But here, that's what I've been looking for next. And so I left this up, but I'm going to take those off for right now, because what I want to do is start building the fibs. So I'm going to go first. Let's go to that 4-hour chart, because now we get to go on minor 3. So first thing I'm going to do, we're going to connect the dots. And we're going to put that down at this low and up to this high. So our fibs coming off. Remember 1.618, and look how deep we're going. So it should be a fun ride. Let's go back to that hourly chart. So again, like I explained in the S&P, I have no reason to start questioning what has already happened into here. And I'm not going to start questioning this, because when I went out to that daily, it fit. This is not a new bull market. It's not going to go flying back up to here and keep going. There are those that are considering that. And I can't say with 100% certainty they're wrong and I'm right. The market's going to let one of us or both of us know where we sit. Because again, as I spoke of, that alternate view remains until we can get this well on its way. Unfortunate, but true. So coming off of there, this all fits clean, right? Intermediate, minor, intermediate. It all fits. And now this slide off of it also fits very cleanly. So we're going to let that develop and see what happens. What I'm looking for now is a continuation and development of the first 5 waves down, which I will then label as a minute wave 1 of 5 that I'm going to be looking for within minor 3. So we're going to get the same type of a deal. This, if we open that just a little bit, a lot of this was the internal sub-minute wave 3 of minute wave 1. So you can see the thirds are going to continue to have power. As we move up a degree, that power is going to be more on display, and it's going to be more extended in terms of time and price. And so when we get to we're going to finish the 1, we get to the 2, we're inside the 3 So we're inside of minute 3, of minor 3, of intermediate 3. There will be a point within that where we will be inside again of a third of a third of a third of a third. So this is the part where if this all is correct, we should see no problems with sellers moving. Oh, no, we're getting out here. Oh no, we're going to continue to get out. Okay, we're just leaving. We're getting out. We're reversing our positions. We're changing our mind. And we're going to it'll just keep flying. So what do we got going on? I think 11,382, that's 100 points from where we are right now. That could be the completion point. We go down, we break below the 200, hit that, then we maybe rally in a 2, but hit that to complete minute wave 1. So we can just walk it all down. 1.618, 100%, where minor wave 3 would be equal to minor wave 1 at 10,186. So we've yet to go sub 10,000. We've gotten close. We have gotten close, but have yet to do it. I think this is the turn. This is where we will go sub 10,000. First up for support would be 98.16, then 1.382, 95.88. 1.618, which is the star of the show in terms of where minor 3 is likely going to kind of come into. And I'm going to be checking, anything below there can fit the bill. So we'll be looking at structure and the fibs together. But ultimately, if I think we're going to get down here, that'll finish minor 3. We get a minor 4. We get a minor 5. Then we're done with the intermediate wave 3. And we're looking at 87, 85, some down in there. So this all fits in the little bit bigger picture. Then we get another intermediate 4, intermediate 5, and we are looking at 618. And then we're inside that price territory of the pandemic, the March 2020 lows. We're inside there. And then we rally, and that would be cycle A, and then we rally. Now, folks, please don't misunderstand. This is definitely not going to happen tomorrow. It's definitely not going to happen for the balance of January. We're going to be on our way, but this takes longer to unfold. This is the big term, the long-term picture. And no, I remain non-biased when I'm trading. Again, I want to say I'm a day trader. So I wasn't scrambling to get out of positions. I wasn't scrambling to get short. I wasn't scrambling to do anything. I was trading the price action. And it makes a big difference. Position trading is a whole world of difference here. And there's a lot of different ways that you can do the positions. And using options are on everything. They work. So et cetera, et cetera. So I'm not saying I'm bearish. I'm presenting what's going to be interpreted as a bearish count. But I have been of the opinion from the all-time highs in both the S&P and the NASDAQ that the market is in a correction. Now, bull market's over, bear market's on. That's how people can accept that, but that's fine. You do what you need to do. But I do believe that we're going to be coming down. Let me say that. So, and I think the reason I'm saying that, folks, is because I just, when we're getting a lot of comments about, the bulls are this, the bears are that. Yeah. It's just clouding your mindset. There are so many ways for firms and traders to put on a bearish position that has a stock going up, has a market rising, but they're putting on very bearish positions, and they take them off that day and walk away with hundreds of thousands of dollars. It's because they are just selling premium, option premium. So as long as options in the derivative markets are going to be as active as they are and as massive as they are, we're going to continue to fight a lot of things along the way, because just the way things are trading is going to take us to where the markets are going to be directional. And if I'm thinking that, well, we're just going up in a correction and we're going to turn and go down, but the market continues to go up and go up and go up, does not mean that those positions that are being put on are not more bearish, but they're nothing, because the positions that are going on are premium. So if we can think about, they're selling premium, hedging it immediately, which locks in a profit. Okay, so I'm looking for it to go down, and then please be aware, I think once we start to get down to a certain level, we'll be looking for it to balance out, finish the first 5 down on an hourly, and then do 3, do an ABC up. Okay, I'm going to end it right there. And our next update will be tomorrow, Thursday, January the 19th.